Welcome to the Explainer. Today, we are diving headfirst into the absolutely massive world of Forex trading. We're going to walk you through, step by step, how to place your very first trade.
So just to give you a sense of scale, get a load of this number. $7.5 trillion. That is the staggering amount of money traded every single day on the foreign exchange market. It makes it by far the largest financial market in the entire world. It's just mind-boggling.
Okay, so when you hear a number like that, it's easy to feel a little intimidated, right? Where do you even start? But here's the secret. You just have to break it down into small, manageable steps. And that is exactly what we are going to do together today. Okay, first things first. Before we get into the nitty-gritty of placing a trade, let's make sure we're all on the same page. We need to understand the arena. So, what is Forex trading anyway? At its heart, it's actually pretty straightforward. You're basically making a bet on the economic health of one country versus another. So, for example, if you think the euro is going to get stronger compared to the US dollar, you'd buy euros and, at the same time, sell dollars. It's this constant, fascinating dance between the world's economies. All right, now this is super important. Before you even think about clicking that buy or sell button, you've got to have a plan. You wouldn't build a house without a blueprint, right? Well, trading is absolutely no different. So, your journey really starts with these three non-negotiables. First up, educate yourself. You have to know the basics. Second, you need to set clear, realistic financial goals. What are you even trying to achieve? And third, and this is the big one, you develop a trading plan. This is your roadmap. And that's the crucial point right there. A trading plan is what separates disciplined, methodical trading from just, gambling. This plan needs to be your rulebook. It has to spell out exactly when you'll enter a trade, when you'll exit, and critically, how you're going to manage your risk. A good rule of thumb, many pros say never risk more than 1 or 2% of your entire account on a single trade. That's key. Okay, so you've got a plan. Now what? Well, now it's time to test it out, but in a completely risk-free environment. And this, my friends, is where a practice account or a demo account becomes your absolute best friend. Seriously, think of it like a flight simulator for traders. It's the perfect analogy. You get the real-time market data, the actual charts, the same price movements, but you're using fake money. It lets you build your skills, test out that trading plan we just talked about, and gain some real confidence without risking a single actual dollar. It's a no-brainer. And look how simple it is to get started. Choose a good, regulated broker. Sign up for a demo account on their site. Download their platform. Something like MT4 or MT5 is super common. Then you just log in and you're off to the races. You can be up and running in a few minutes. Seriously, do not skip this step. It's essential. All right, time to put this all together. Let's walk through your very first hypothetical trade inside that demo account. We're going to make this super clear and practical. Okay, so let's imagine your research, based on your shiny new trading plan, of course, tells you that the euro is likely to get stronger against the US dollar. This is your trading idea, your hypothesis. And this brings us right to a core concept, the currency pair. So in our example, we're looking at URR/USD. The first currency, the euro, is called the base currency. The second one, the US dollar, is the quote currency. The price you see on the screen, that's just how many US dollars it costs to buy one single euro. That's it. Simple, right? Now, one of the coolest things about Forex is that you can make money whether a currency goes up or down. So in our example, since we think the euro, that's our base currency, is going to rise, we're going to take what's called a long position. In other words, we're going to buy the EUR/USD pair. Okay, here's where we actually place the trade. We're placing a buy order. Now, look closely here. We're buying one lot. A lot is just how you measure the size of your trade, and a standard lot is 100,000 units of that base currency. But even more important than that, we're setting a stop-loss order. This is your absolute non-negotiable safety net. So what is a stop-loss? It's exactly what it sounds like. It's an automated order you give your broker that basically says, hey, if this trade starts losing and hits this specific price, get me out immediately. I want to limit my losses. I'm telling you, ignoring this tool is one of the biggest, and I mean biggest, mistakes new traders make. It's how you protect your money. And success. The market moved just like you thought it would. The price went up by 50 pips.
Now, a pip is just the tiny little unit of measurement for a currency pair's price change. For Euro USD, it's usually that fourth decimal place. So how did that 50 pip move turn into a $500 profit in our demo account? Well, with a standard lot size of one lot, each pip is worth about 10 bucks. So you do the math. 50 pips times $10 per pip, boom, a $500 virtual profit. So that was a successful trade. Awesome. But here's the thing. The real secret to long-term success isn't just about knowing what to do. It's actually more about knowing what not to do. Now look, this isn't to scare you away, but it's a reality check. The quote here points to two huge culprits for why traders lose money: emotional decisions and excessive leverage. Leverage is basically borrowed money from your broker. It's a double-edged sword. It can amplify your profits, but it can also amplify your losses just as fast. This is why, in the long run, discipline is so much more important than trying to find some perfect strategy. And this chart really drives the point home. Look at this. In all sorts of organizations, almost half of all mistakes come from one simple thing: people not following the proper procedures. And what's your procedure in trading? It's your trading plan. Sticking to that plan is everything. Deviating from it is pretty much the fastest way to get into trouble. And here they are, the classic rookie mistakes. We're talking about emotional trading, letting fear and greed take the wheel, sizing your positions too big, forgetting to use that all-important stop loss, strategy hopping, jumping from one system to the next without giving anything a real chance, and of course, expecting to get rich overnight. But look, every single one of these can be avoided if you just stick to that plan with discipline. So, you've seen the first step. But the real question is, are you ready for the long journey? Because that's what this is. Your first demo trade is just the starting line. The real keys to make it in the Forex market, it's patience, it's that unwavering discipline we keep talking about, and it's a commitment to always, always be learning.